You are looking at your credit score right now and you are wondering, why in the world is my credit score not increasing? It's been stagnant for these past few months. What in the world is going on? And you pretty much pay everything on time. Then don't worry, I got you, because I know exactly what's going on. Because in today's lesson, I'm going to explain how your utilization is seriously hurting your credit score. And I'm going to give you some tips and tricks on how you can fix that as well. So go ahead, go get your pen and paper. I promise you it's going to be a good one, and make sure you stay to the end so you don't miss any steps and any ways on how to fix this, all right? Because I promise you, this is 99% of the reason why your credit score is the way it is. And without further ado, let's dive in. All right, ladies and gentlemen, before we get started, I just want to ask if you don't mind hitting that like button for me, as it helps my channel out a ton. Y'all, I truly appreciate all your support. Now, enough of me rambling. Let's get into this credit issue that you're having. So what really sparked this whole video right here is, of course, I speak to people on the regular every day when it pertains to their credit, business funding strategies. Everything is pertaining around credit, all right? And whether it's a normal conversation or they're trying to access the credit restoration program that I have set up for you guys. And I don't know, lately I'm starting to see a pattern when it comes to these calls. And what do I actually mean by a pattern is when I get these people to pull their credit report and I take a very, very long look at what is going on, at times I don't really see anything like super threatening. Again, I don't see any bankruptcies, no recent late payments, things of that nature. So I'm just figuring out, like, why in the world are they not at 700s or anything of that nature? And this is just me really just skimming through it, all right? But then I really start actually pinpointing and I actually start bridging the gap, and I see, oh, okay, their utilization is extremely high. So of course, my next question, of course, to them will be, so how is your repayment process going? Like, can you walk me through that? And then I always get something along the lines of, oh yeah, I pay my balances off. You know, I pay them on my credit cards. You know, things of that nature. You know, I do have balances. You know, but you know, I'm making my minimum payments. Guys, you have to understand that making minimum payments is a scam, and I promise you, it's going to continuously keep you in the hole forever. I keep hearing over and over again, I'm making my payments, but when I keep asking, it's really just making that minimum payment. And I'm telling you right now, it's not good enough. Making that minimum payment is not good enough for two reasons. For number one is, when you start making the minimum payments, you're tacking on extra interest that you didn't have to have. The banks always make money off of people that keep actual balances on their credit cards. I didn't know that you were in the field of giving people free money. Now, I don't want you to do that, all right? Please. So you have to stop doing that. And number two is, you're raising your utilization, which is why this video came about. Now, if that's all you can do at this time is make a minimum payment because you're going through some type of financial hardship, something that just happened just abruptly or anything like that, then I'm not referring to you, all right? You're totally different. You have an actual reason why you can't pay everything off. I'm talking about the people that just been racking up consumer debt over time, and they thinking, yo, I can just make the minimum payment, and thinking that their utilization is not going to creep up on them, which is sadly mistaken, because when you want to go apply for something, it's going to creep up. Those lenders are going to see what's going on, and you're going to get a fat denial. Now, do you want that? No. Utilization is the second highest tier on the credit wheel, sitting at a whopping 30%. So that is 5% lighter than payment history, which is number one. And if you've ever gotten a late payment, whether it's 30, 60, 90, 120 days late, then you know how hard of an impact that makes on your credit report. So I'm telling you right now, what do you think making the minimum payments time and time again going to do to your credit score? So it's time for you to start lowering those balances on those credit cards so you can shrink your utilization. Stop thinking that your credit card is just something that you can just pay over time. You can do it, but I promise you, with every action, there's a reaction. And sometimes that reaction isn't always good for you. You got to stop saying, oh, I'll spend $4,000 and I'll just put $100 on it every other week. You need to pay these things off, because you got to remember that your credit is nothing but an algorithm. Do you want your algorithm to get used to you doing negative things? No, it's not going to work out, okay? So with that being said, with your utilization, always remember, a good rule of thumb is to have your utilization below 10% by the due date. That's the goal that I want you to achieve each and every time. I don't care what you do during the month, as long as you pay it off or the most you have on it is 10%, all right? That's all I want you to have. Now, of course, there are many different ways on how you could pay this debt off, but I'm just gonna give you the ones that I've used and the ones that I've seen people use that actually worked out in their favor, okay? So let's go ahead and get off with the first one, which is the snowball method. You probably heard of it. You probably haven't heard of it. It's basically when you take your smallest amount in your actual consumer debt itself and you pretty much front load as much income or as much payments or as many payments as you can towards it until you pay it off. I know it sounds easier said than done, but this can sometimes be a hassle for people, but I'm telling you, it's super duper effective. So of course, it's all about, instead of looking at your debt like a humongous mountain, you actually reverse engineer and you say, okay, just one foot in front of the other. Okay, this is the second lowest on the wheel. Let me take care of this and then I'll move on to the next one, and then you just keep going until everything is conquered. Does that make sense? I'll give you, of course, a great example. Now, when I was in $10,000 in debt because of my first business that didn't work out, I had to actually reverse engineer and figure out how to tackle this because 10,000 was a lot for me at that time. I'm like, I don't even know how to get through to this. So what I did was snowball method. Let me find the smallest balance right there and then just keep working my way up. So I had it over a course of different business credit cards. So I told myself I'm gonna go after the smallest one first, which I did. So I threw all of my extra income or all of my extra money after all expenses were paid, and I threw that towards those balances. And I kept just going, shoveling each and every month until everything started paying itself off and I started seeing the light at the end of the tunnel. Now, in your case, it could be $1,000 a month, or it could be $100. It does not matter. Just make sure that you attack this each and every month so you can get out of this hole of debt, okay? Please understand this. So that's the first one that you can use. The next one that you can use is you can go ahead and apply for a personal loan. Now, hold on. I already know. I can feel you about to click off of this video because you think I'm trying to put you in way more debt. Hold on, chill, relax. Just listen. So what you can do right here is you can access a personal loan that equals to the majority of your debt that you actually owe. Let me explain. So for example, again, let's just say you owe that $10,000 in debt. You could possibly get a $7,000 to $10,000 loan from your institution, whether it's a big bank or a small institution like a credit union like PenFed, Navy Federal, or any other credit union that you're associated with, and you can actually utilize their personal loans. Next, what I want you to do is I want you to utilize that money once it goes into your account and actually disperse it to each debt that you actually have, okay? So whether you owe $8,000 here, $400 here, $2,000 here, it doesn't matter. Just make sure you throw all the money where it needs to go, okay? Thus lowering your utilization. And now you can attack only the loan itself, and you can quickly pay it off because instead of you looking in 5 different directions, you're only looking at that one thing and trying to attack it, okay? Now, disclaimer, I want to let you know right now, your DTI can increase once you get the loan, okay? Being that it's going to be on your report, but always keep this in mind. It shouldn't be there for long. We are worried about your utilization, people, not your DTI. This is a fair warning. Your utilization is very important. So if you're trying to go get an auto loan, home loan, whatever you're trying to do, you don't need to worry about that right now because your utilization is probably going to stop you or get you something that you don't want to get. So don't worry about your DTI. Worry about your utilization, all right? Now, this is the last disclaimer that I'm going to give to you as well. This process is going to suck. You're going to think all the time this sucks. I'm telling you right now, because you're taking all of the extra money that you have and you're putting it towards your debt. So there's not going to be a lot of going out with your friends, going out here, doing this, doing out, eating at your favorite places that you eat on the normal, and more. It's going to be extremely limited. You're going to be bored. So it might be sometimes you might have to eat a couple of noodles, you know what I'm saying? You might eat a couple of noodles, you might have to cook inside every day, things of that nature, you might have to prep. Oh, well, hey, behavior, or create great habits, okay? But this is what it takes for you to become free of consumer debt, all right? And this is going to what? Raise your credit score. Because trust me, you will need your credit in the future, whether you know it or not. I'm telling you right now. So you think that, oh, it doesn't matter what my credit says, all of this type of stuff. You are going to need your credit one way or another. So you might as well suffer now so you can reap the benefits later, okay? Please heed my warning. Just take care of it. Now, the one thing I will never do is tell you that this is going to be easy. But I promise you, and I can guarantee that this will be worth it. And also, if you have any negatives associated with those utilizations, then I want you to join the How to Credit Restoration Program, where you can get all of those removed, aka those negatives, without lifting a finger. And the link will be in the description below, all right? But overall, if you actually utilize what I gave you in this video and you use this to kickstart, just start to take care of that utilization, then you will have no issues in the future and you will never run into this problem again, okay? But I'm curious to know what you guys think. Do you guys think that you should just forever make the minimum payments? It doesn't matter, it'll get paid off eventually, even if you pay the bank $5,000 in interest and everything I'm saying is wrong? Let me know in the comment section, all right? I want to appreciate you guys for stopping by. And until next time, ladies and gents.